Money Miners, here we go. Mate, we have a new segment, and I could nearly guarantee that this will be a daily segment, not giving it away yet. Trav,
Matty,
you would say the headline story today
we got that.
is finally
The fumble in the jungle.
Sierra Rutile.
I appreciate that. Yep, the people have spoken, the money miners have spoken. They care about the fumble in the jungle more than anything else.
Oh, nothing. There wasn't much else out there today either, but no, definitely not. What else we got? Rio South 32 potentially being divested by the bloody biggest sovereign wealth fund in the world. Is it the biggest?
Yeah,
Yeah.
definitely.
Mate, and we're going to get into the old win some deal, the diamond mine.
Yeah, are they winning some?
Mate, so Trav, no better than yourself to introduce our new segment to Money and Mine.
Oh, Matty, I'm excited about this one. We're going to test things out, a new segment. Like you said, Matty, we're going to have no shortage of content for this one if we continue, but we've got to get some feedback on it. So we're trialling this new segment. It's very brief. I'm going to call it Who Needs Bloomberg When You Have LinkedIn? Today's feature, the gold price is flirting with US $2,300 per ounce, brought to you by Simon Lawson on LinkedIn.
Oh, there you go.
Solid.
Do you reckon this is going to be diversified across a lot of commodities, or it might be just gold related?
I reckon there'll be no shortage of commodities. Whatever goes up, we will see an MD or 12 of them pointing to the price.
Forget
on
Stralo
LinkedIn, irrespective
checking.
of if they produce it or not.
Do you reckon when Stralo checked it every day, as he said, I think he was referring to LinkedIn.
Yeah.
Yeah.
Simon had to do him every hour.
.org. Right. First up, before we get into the other stories, Trav, we want an update from you. The money miners want an update from you about what the hell.
What's been going on with the jungle?
I didn't know what that face was. What's going on with the fumble in the jungle, Trav?
Yeah, mate. I mean, I think I've crossed wires with Mr. Raper, so we might not have him dialing in today. If you're listening to this version of our recording, means we got our wires crossed. But next time, we'll be sure to get Mr. Raper on. But Jeremy Raper, former guest of the show, activist, sort of shareholder, mate. I'm grateful because he's the only other person in the world that seems to care about this deal after my such enthusiastic passion for the battle for Sierra Rutile. Still waiting for the AFR or the Australian to clue on that this is the best M&A deal going around at the moment.
Give it the attention it deserves.
But Mr. Raper clearly understands because he put out a tweet thread about the deal last night, and it was pretty enlightening. I thought I admittedly haven't actually provided an update to the money miners for an entire week, and there's been some developments. Like literally a week ago, there were some pretty big developments. The board of Sierra Rutile themselves came out with what was an extremely firm response, which surprised me a little bit. I wasn't quite sure if the board would be strong or not, especially given you had Mano Mining, you had PRM, and you had board tilts left, right, and centre. Even you even had Stam kind of put in a bloody an application to remove one of the directors. So with all of that kind of board kerfuffle, I wasn't actually quite sure that we would get kind of a position from the board that would say we're strong in basically advocating that this deal does not adequately value what we believe the equity of the company to be.
Yeah, so Jeremy did a great Twitter thread. You can just go on his account and check that out. And to your point on broader interest, while I found the thread fascinating, just like I found your narration of the situation fascinating, Trav, I didn't get an awful lot of traffic, but it is very interesting. So you should go and check it out. And obviously he breaks it out from an investor's point of view. It's a to be upfront with all the money miners. He has bought stock in the company, SRX now, so he's got a vested interest, obviously, but he breaks out logically where he sees value, where the previous bid came in at, where he thinks the working capital position and the inventory being turned into cash leaves the business right now, and he formulates a pretty intriguing case for there being value in the business, given it's currently trading at that 11 to 11.5 cent range.
His was more about the money. Yours was about the people.
It's a story, mate. The story's always the people.
If we can bring you two together, Jesus Christ.
In fact, I've got a quote here from in the board's basically the opposition to the hostile offer from PRM. Sierra Rutile's chairman Greg Martin said, "We have formed the view that the offer is opportunistic, inadequate, and undervalues the company following the board's preliminary review of the unsolicited on-market takeover offer from PRM. PRM has opportunistically timed its offer ahead of key value catalysts such as the Semberhun DFS, and we do not believe it reflects Sierra Rutile significant strategic value as a major participant in the global mineral sands industry. So, and that was they when they came out with this response, the board, they also basically revealed an updated working capital position of Sierra Rutile, and what you could see there is they've actually sold a bunch of their inventory for cash that was about to kind of come into their bank account, which you could basically deduce from that the company would have a cash position close to about $40 million US dollars. And when I kind of hypothesized before, I was saying they might have some funding pressure, and that might be a factor in this deal. If that cash balance is real from selling the inventory, then they're not under funding pressure in the near term. So contingent on, mate, where is the cash? Is the cash in country, or is the cash in a
foreign
US
bank account?
Which you'd hope it is, right?
So to give a bit more perspective for the money miners, there's lots of new info coming out. The name you just heard Trav say,
Semberhun.
Exactly. That is
I don't know if I'm saying that right.
That is the growth project, which had a MPV, a few years ago, obviously on different assumptions. The prices haven't gone too kindly for rutile in recent times. So that is the growth project. So call it roughly 300 million NPV. It's clearly not what they're going to get for it at the moment. And then you've got the Area 1 project, which is the one which has been turned uneconomic given...
well, it's still making money, and it's got a few more years of mine life. But for the time being, when you've got a pretty hostile, in-country dynamic, then I'd like to make money from it. But
the changes in government legislation are making it less and less attractive.
And that in itself is an interesting point, JD, because you've got if you look at the implied equity value of PRM's 9.5 cent per share offer, what does it imply that the total equity value of Sierra Rutile is? Well, it implies about a US $26 million equity value. Compare that with the cash alone, right? So what are they doing? They're this hostile bid from PRM, and it's an attempt to buy $1 for 50 cents, and then there's clearly no value you ascribe to the growth project Semberhun. One thing I find interesting, right, is the tax regime in all this, because we talk about the renegotiations of the fiscal regime in relation to Area 1. Well, that was a deal struck between Sierra Rutile and the government of Sierra Leone, but it only related to Area 1, but it saw them have some concessions for that. So as I understand, all of the numbers in relation to that $300 million NPV for Semberhun, now the market's changed since then, the rutile prices, etc., have come off a bit, but those numbers are run assuming the normal fiscal regime, not the amended one for Area 1, which had these concessions.
Yeah.
And we know, based on some of the investigations we've done into other operations in Sierra Rutile, is there's this, it seems to be a weird history of some mining operations literally paying nothing to the government. In fact, the diamond mine that Jean Joubert used to run or operate or whatever, that I found this article online basically saying that because it's that mine was operated by a company which its parent was ultimately a Guernsey-based entity, and it wasn't registered for operations in Sierra Leone. It didn't have to pay any tax. So can you imagine that? And that was a ruling from the High Court of Sierra Leone back in 2016.
Let's be very clear. Some people in Sierra Leone have made a lot of money from that, and it's not the people of the country.
So you're right. And my point is, imagine Semberhun's economics to an entity that might have a far greater tax rate, tax long-term tax outlook in relation to what they have to pay the government than what a Sierra Rutile might be. So that might actually be worth a lot more than or a lot less, just depending on what that part of the equation is.
Absolutely. And another fascinating detail on the asset itself, if it does come online, it's going to make up roughly 10% of the market. So it is a substantial project in the context of its commodity globally.
Totally. And there's one more minor detail that I'll throw out there, which Jeremy didn't include in his great tweet thread, but I thought it's worthy to add to the conversation. And that's that 6 days after PRM lobbed its bidder statement to market when it came out with this hostile bid, they subsequently come out with a replacement bidder statement. It was one of those horrible PDFs that gets uploaded and it's like a scan document, so it's really hard to control F in them. I hate them. Don't ever upload one of them to ASX. I'll come for you.
Yeah, look out, Jan.
But in this replacement bidder statement, they'd actually changed Section 7.2, which talked about how PRM intends to fund the offer. Now, remember, PRM is the entity associated with Gerald Group CEO Craig Dean. And in this replacement bidder statement, they basically reveal that PRM has available to it through its own accounts and those of Craig Dean cash reserves deposited in US bank accounts regulated by the FDIC of approximately $40 million, which will enable it to pay cash consideration, including any relevant transaction costs pursuant to the offer. The funds committed for this purpose are not required for any other arrangements or obligations. So there you go. They've literally, like PRM, despite having an offer on the table which applies an equity value of $26 million, have $40 million in a bank account or bank accounts, basically, signpost for nothing else except for this deal.
That is which is super important point, because that equates to
14.5 cents.
Exactly. So 50 plus% higher than what their current bid is, and that money is essentially earmarked for
no other purpose.
Exactly. So that is a detail, like you said, not mentioned by Jeremy, but is a point I think would be of particular interest to him, given, trying to understand the dynamics of what they could potentially pay, what they'd be comfortable paying up to. Is it something perhaps they've spoken about already?
Anyway, I'm sure we'll be talking about this deal for a while to come, and maybe the next twist in the chapter of the fumble in the jungle will have Mr. Raper Darling himself.
Mate, when yous get together, Trav, you and Mr. Raper, I consider yous will be like two testicles inside a proverbial scrotum that is the battle of the Sierra Rutile. Yous will be inseparable and go together on this journey. I can't wait. I cannot wait.
I look forward to it too, Matty. And the offer remains open to Stamp as well. I'd love to talk to those guys about it.
Oh, yep. Very good. Right, next up, we are going to yarn about Winsome.
Winsome, they're out of trading halt. They've signed an exclusive option agreement to acquire the Renard diamond mine and the plant, more importantly. So Renard sits 60 kilometres as the crow flies from their Adina lithium project. Of course, they are in the lithium business.
North American lithium business.
Exactly.
In the cold country.
Yeah, unfortunately, they're not getting into diamonds. That'd be interesting. But they are hoping that this plant can kickstart their Adina operation. So this mine actually wasn't built too long ago. 2016 is when it first started operating, for 7 years until 2023. But the owner, Stornoway Diamonds, they entered insolvency twice in the last 4 years. So diamond prices haven't been too favourable for them. But the plant itself, 2.2 million tonnes per annum. So let's get into what that could possibly mean, what repurposing it looks like for...
JD, put your metallurgy hat on for me today, mate.
My metallurgy hat.
Give me the spiel. How hard or easy will it be to convert this plant to process spodumene?
Overall, they've got a lot of what they need. So the plant includes all the standard equipment that you would need for processing lithium, primary, secondary, tertiary crushing circuit. They've got 2 DMS circuits, a tailings thickening and dewatering circuit. They have a high pressure grinding rolls there, but getting our Intel Matty, they probably don't actually need these ones. So what they don't have is a ball mill in the circuit, and there's an added complexity given the climate there. We'll show a picture. Everything's stored under a shed, so it might be a bit iffy, a bit finicky, expanding the shed, getting the ball mill where you need it.
Yeah, you can't just move a few cupboards in there and shelves and just for a space for a ball mill, can you?
Exactly.
Bit of an extension because the high pressure grinding, so that takes it down to very fine. But then if you chuck that through the ball mill, you're just wasting fucking energy, aren't you?
Yeah.
And then so it'd be jaw crusher to cone crusher to ball mill.
Yeah.
To optimize the power usage.
Exactly. And that's, obviously a big part of the cost there. So they're going to run some met test work and see what exactly sizes they need to get things down to and how long that all takes in this option period. In terms of other infrastructure, you've got an airstrip, 16 megawatt power station, which is a very solid amount of power. Water treatment plant, tailing storage, camp offices, all these sorts of things. Obviously, it was an operating mine, so they've got most of what they need. And apparently the water, you don't have any of the concerns that spring to mind in WA. Up there, the water's great. So by and large, getting mostly what they need.
So I think the road's the factor here, eh? Especially due to snow and everything like that. Road is very important in North America.
Yes, being able to access your mine site is super important. So we spoke a
And
bit.
truck the fucking ore.
Yeah, so we spoke a bit about it yesterday, and it's a bit different to those other diamond mines up in the north of Canada. There's an all season access road there, which connects the site to local roads, and that's how they word on the first page. But that doesn't actually connect their resource, Adina, to the Renard mine site. So they've got a bit of work to do on that front. They said on the call, not in the announcement, but on the call, that it would cost roughly $1 million per kilometre for a road that would be 80 kilometres in total. And of course, they want the government to pay for this. So there's a $1.5 billion critical minerals infrastructure fund, which they're looking to tap into.
Yep.
These things don't move quickly. I'm sure they're working on it, and they'll do it in tandem with everything else they're looking at the mine site whilst they convert the resource into a reserve and all these sorts of things. And like you say, Maddie, given the conditions where they are, some of those mines that I'd spoken about the other day, they only have access for 2 months of the year. They're trying to, they want to build something where they have access year round. But given you could have road closures when snow melts and whatnot, all these other issues, you'd imagine they want to build a big area for stockpiles. And given the lakes, the forests, all these sorts of things around, it might be a bit more finicky trying to clear out and make the space for that. But, given we're talking about at least a couple of years until they would be producing anyway, I'm sure they can get over those hurdles.
What was the deal? How much did it end up costing them?
So $4 million option fee that's paid in cash with the potential to extend it. They're going to use that time to study all the options. And you have to actually find it on the 9th page of the announcement what they're actually paying. So I'm not sure what that says about the company and the price tag they're paying. But if the option's exercised, they're going to pay Canadian $52 million in total. That's a combination of cash and stock at the buyer's discretion. And that is made up of $15 million on closing, 22 after a year, and another 15 after 2 years. So all up, there's pretty solid potential about this reducing the development time. We've spoken at length about Canadian operations, how long it can take to get something online. Over there, that's permitting on all different sorts of fronts. You've got water, power, land, environmental, all these sorts of things. So that can massively reduce the development time. And then, of course, you've got the CapEx. Even if you're adding a couple $100 million, including building the road and these sorts of things. We saw Moblin come out with their CapEx at about $1 billion, and that was for a 1.8 million tonne per annum plant.
Yeah.
Similar part of the world. Obviously, there's a good few details that are a bit different for Moblin, but just for scale, $1 billion versus getting this for 52 plus, say, a couple hundred more is pretty good on the surface of it. Obviously, if you got to haul the stuff 80 kilometres, your haulage costs, your OPEX by nature is going to tick up a bit, but you'd think that is more than likely offset by the CapEx which you're experiencing in those early years versus the OPEX which is experienced over the life of it.
I'd be interested to know for a North American project what, if you compare the mining to the processing for the permitting and environmental side, which is the biggest hurdle, if it's the excavation itself and everything that comes with that, or the processing in terms of tailings, disposal, water treatment, like which is the actual, how much of a help this is, or is permitting the actual mine itself still a big challenge? So anyone that's got info, send her in.
Yeah, they need to tweak their permitting on that front as well, because it's a permit for a diamond mine. They need to tweak it for a lithium extraction. Like the mine itself and permitting Adina is one thing, and then they've also got to change the permits at the plant itself. Yeah. But it makes me think of the conversation I had with Emmanuel Dat and his Substack post on resource investing adages. And there was one that stood out. It was taking advantage of sunk capital in a nutshell. $900 million has gone into the ground here. And if you can get that for, 10 or 20 or 30 or whatever it is cents on the dollar, then that is a pretty big free kick in picking up the next swing in the commodity cycle and, profiting from it. So all that said, it's a 1.12% ore body. That's not knockout amongst lithium peers, and a lot more network and things need to be done. Like we said, permitting takes a long time. They're trying to win over budgeting approval and get some funding. So it's going to take some time.
There's an interesting part of this deal, which I don't know if it would play a role or not in the long run, but because part of the consideration is scrip, you'll find if you look at the shareholders of is it Stornoway? Stornoway, are actually Canadian government pension funds, so sort of part of that contingent. So I wonder if you get more buy-in on some of those like roadblocks that you face getting a mine into production in Canada, if you actually have as a shareholder, some of the affiliated parties who make those kinds of decisions.
Yeah, it's a funny one. They don't mention it in Winsome's announcement, but I did hear 35% owners the Quebec government, and then another 15 is the big Canadian, the biggest pension fund in Canada. So maybe that helps, but all up, lowering your capex, bringing cash flows forward, and de-risking, which can potentially, maybe you can use a lower discount rate in your model, are generally positive things. So yeah, there's a bit to be said for that.
And going back to what you said about water, apparently that is like bloody clean as anything. No saline issues over there or nothing. I reckon you'd even bath in it, JD.
I think you would too, mate.
Have a look at this photo. Look at how beautiful bloody that is. Look at the lakes. And let's contrast that. So imagine just needing water. No bores or anything, just bloody pump her out of there. Let's contrast it to the arid Australia. Have a look at this. Check this video. Here's pipelines coming out of bores. We've got to be responsible and pipe that shit into a get wet bladder.
Too easy.
Yeah, bloody mate, that is no lakes in the Pilbara, JD. Mate, us Aussie miners, we need to get smart and get wet with our water. Don't waste it. Stick it in a 2 million litre get wet bladder. Just lock it in.
2 million.
Get it in the bank.
Basically, an Olympic-sized swimming pool in a goon bag.
Yeah.
You put it by your mine site and you use it as you need it at better flow rates than you can get out of the ground or the truck. It's just, it's literally...
Fucking no-brainer, isn't it, Trav?
It's a no-brainer, mate.
Mate, fill up them water trucks for the bloody dust suppression, because nothing pisses miners off more than dust. So make sure your mine site is just riddled with these get wet bladders, and just, mate, water carts, just be spraying water everywhere, and it'd just be a beautiful place to work. The dust is just fucked right off.
Here's the cherry on top, Matty. They do it in pretty much every state of Australia, and they just come and do it for you.
And they are the only company that does it, JD. They supply them, they install them, they design the pipe work, they design the pumping system, they put it in for you. Bloody everything. Just get your mine site wet with Get Wet.
Give Matty Hall an email.
Matty Hall is the man for it.
Tell you what, Matty, keen to get wet drinking beers tonight.
I'm going to get the throat a bit wet this Harvey. Yeah. I'm going to drive tonight. I'm testing out my maturity. I'm going to space my beers out. I'm going to sit back and instead of having a beer, I'm going to have an arancini.
A responsible man.
That's how we roll. Well, there you go. Now, JD, this is big company, global, the biggest friggin' sovereign wealth fund in the world. Like, talk about being in your wheelhouse. Norges, Rio Tinto, South 32, bauxite mines. Mate, this has just got Jonas Dorling written all over it. Cobber, what is going on here?
Yeah, so let's just start with Norges. They're huge. You said at the beginning of the show, Matty, the biggest sovereign wealth fund in the world. A lousy $1.6 trillion is what they're managing there. So
all from oil back in the day, wasn't it?
Yeah, all up in the North Sea there. So, I mean, for a country of 5.5 million people, that is pretty astounding. There was a line in the announcement that the Wall Street Journal got that said Norges holds on average a 1.5% stake in the world's listed companies, which is just ludicrous to think about.
That's wild, mate. Wild.
Just crazy.
5.5 million people live there, so like a quarter of Australia. And they own 1.5% of the world's listed equities.
Yeah, and I mean, just dividing that up between the population, you get a bit under 500,000 Aussie dollars per person. Just crazy.
Gee, it'd be nice if we had one of them in Australia.
It would be. The future fund is on its way, mate. So
you might have a few billionaires lobby against that one, mate.
Yeah. Fucking hell.
So they have an ethics advisor for all of their investments, and they're putting S32, like you said, and Rio Matty under the microscope for alleged deforestation claims at the jointly owned bauxite mines in the northern Brazilian area in the Amazon there. So we've actually spoken about the mine and the sort of related alumina refinery in the past when Glencore bought in a big stake off Norsk Hydro, a Norwegian company as well. So we'll get into that a bit later. But The fund owns 2.2% of Rio and 2.1% of South 32. So they're the fifth biggest shareholder in Rio.
Far out.
Yeah.
That is that's astounding.
It's an enormous position in dollar terms. Like it's a giant position.
And it's not their first brush with Rio either. They divested their stake from Rio over concerns about Rio's stake in the Grasberg copper mine in Indonesia around 2008. And then when Rio sold that stake, Norges were happy and they bought back into Rio just in 2019, I believe. So they're familiar with how this works. And their ethics committee that advises Norges, they give them this sort of statement on every investment, and Norges has followed every single recommendation relating to the environment since 2015. So, with that in mind, if the Council on Ethics are to say they're not happy with what's going on, it seems pretty likely that they will divest. So we don't know exactly where they're at
is
yet.
this a big part of Norges? The environmental, the ESG side of things?
It drives a huge
recent
amount of
times.
capital.
Yeah.
I mean, like they divested from Glencore. Now, some people could argue that why is Glencore really underperformed when you look at it on its rolling EV EBITDA multiple, right? And part of the reason is that the capital outflows that you got from Norges divesting.
Yeah, wow.
I mean, I think there's a lot of stories of the ways in which this entity, this sovereign wealth fund, and other big capital flows have put pressure on these large companies to meet whatever their criteria are. And I don't think at times they've always been sensible. Like they've basically had these criteria on how much of your portfolio is green or whatnot, right? But what does that do? Does that actually reduce emissions, or does that just send the same assets to someone else where they're going to be operated under a worse environment and do more damage to the environment?
Yeah, well said. It's a debate that's been raging really strongly for the last 5 years, and Glencore were at the centre of it, particularly in that sort of 2020, 2021 period, when their philosophy was firmly that they are the better operators. It is better having it in their hands than private companies in countries you don't see or hear or think about. And that is how they were going to tackle ESG and over time, wind down the assets and look after the rehab costs. So that has slightly changed in modern times. But
so technically they're invested in Jabaluka.
Yeah, indirectly they are. I mean, that, and there would be one of the parties making sure that the rehab goes how they want it to go there. So the environmental impact assessment, which is done with all mining projects, was completed and approved prior to production when it started at this particular bauxite mine, which is referred to as MRN, in 2019. So as you'd expect, that was all done. Now, there's allegations that there's been serious disturbances to 4 villages in the area, and I'd say this will be a focus of the review. And just to put it into perspective, this mine is massive. 12 million tonnes per annum of bauxite goes out. It's 22% owned by Rio, 33% owned by South 32, and 45% owned by Glencore. And like we said already, Norges has divested from Glencore in the past, so hence they're not a part of this debate at the moment. We've previously spoken about Glencore's purchase of their purchase of the stake in MRN and Alunorte. That closed 3 or 4 months ago, and as I mentioned, Norsk Hydro, a Norwegian company which is also backed by the Norges Sovereign Wealth Fund, are involved. So you'd have to imagine that they've sold their stake, but they're still receiving bauxite from the operations. So whilst they're a much smaller company, you'd have to think that they're going to, have themselves put under the microscope by the Sovereign Wealth Fund as well, because it doesn't really make sense if you're just still getting the product at the end of the day. You're just as responsible, at least in my opinion, a part of the whole process. So remains to be seen, but as we said, this is a big deal. Having these guys pull out of your fund can have pretty big ramifications on, how you trade, multiples you trade at, as we've seen with Glencore.
Isn't it interesting, but looking at how big Rio Tinto is, how many operations they have, but it can only take a small amount of operations to be put under the microscope by Norges.
Absolutely. I mean, one operation, but they're not even the operator of this mine, but you bet they're working super hard, both technically and with the committee, trying to clean up everything and make it sure it's done by the book. Because it's kind of like how we spoke with the coal assets and BHP selling them, a slight change in the multiple that they trade on can have such a huge impact. It's far outweighs perhaps a $1 or $2 billion in in profit or a sale or anything like that. These things really matter for the companies.
God,
I was just going to say, I'm pretty sure a lot of the portfolio repositioning that you have seen out of BHP, even South 32, has in a pretty big way been influenced by the likes of Norges Bank.
Yeah. Yeah, the other thing...
as in them going in.
As in them, like, threatening, we will, you will not meet our criteria for investment. And when you own like billions of dollars of stock, right? Like, imagine if you're there as a CEO, you're thinking, well, it's not like you can block trade that stock to someone else. Yeah. The only way they get out is they sell it on market, and that flows to the outside, which might not offset flows to the inside, which means you derate.
Yeah.
Yeah. BlackRock is a company that has also had a sort of similar philosophy and been framed of in the media similarly to Norges in how they view the market. They've actually also sort of slightly changed their outlook coming out the back of that 2020, 2021 period. But in that period, they were very much of the same sort of view as Norges, as like you can't be invested in any of these things. And that was their philosophy on how we reach our climate goals in time. And that stance has sort of softened and changed over time, but it can have pretty disastrous impacts. You know, BlackRock, I think, has almost 10 trillion under advice or management or whatever. So these things really matter to the huge companies in the world.
So when BHP are putting new mandates out, it's not BHP talking, it's possibly Norges or BlackRock or something sometimes.
It's BHP talking, knowing firmly what their biggest investors want them to say.
Yeah. Looking at this picture, and I think we talked about it before about the bauxite mines down south here. Like, look at the size of the excavation and the land that is taken out for this. In terms of that scale, I think the Brooks Group is the only company in Australia that will be able to supply enough equipment to execute that. Don't you think, JD?
I think you're bang on, Nate.
Far out.
I mean, they just look after all your needs.
Oh.
Anything you need.
I'll tell you what, JD, bloody, you want to excavate something that big, mate, probably infinite size. Their partnership with XCMG now, mate, they've got everything to do it, JD, mate, I look at that and I know you're going to need an excavator. You're going to need a shitload of massive trucks. You're going to need dozers. You're going to need loaders. You're going to need rollers. You're going to need graders, mate. Brooks Equipment Sales, physically and metaphorically moving the earth for Australia. That is what they do.
What state are they in, Matt?
Mate, so these dealerships, WA, South Australia, Northern Territory, majority of Queensland, and moving dirt is one thing, but the Brooks Group, using Brooks Airways, can move us from one place to another place far away.
And they can move you too.
That unbelievable. So, mate, spearheading the FIFO industry, spearheading the earth moving and mining industry, Brooks is the heart of Australia. That's Qantas, isn't it? Not anymore.
It's Brooks.
It's Brooks
Brooks.
now.
I saw one of those things that like lift goes up and down the other day. It was Brooks. Yeah.
Bloody,
you just spotted
like
it.
Like
a cherry picker thing.
telehandler
That
thing.
one. Yeah, that
Not
one.
a telehandler.
Yeah, I don't
Fuck, what are they?
I don't know.
EWP.
Well, you're going to have to explain that to me next, Dad.
What are they fucking called, them things?
The cherry pickers, those ones.
Big cherry pickers. Well, there's another technical term for them.
Since when do you use the technical
All
term?
sorts. Big, tall fucking thing.
That's the one.
EWP, cherry picker, whatever you bloody want to call it.
Yeah.
Love your work, Brooks. Right.
Well, we better get out of here, mate. We got to get an edit done before the show.
Oh, yeah, true. Right. Oh, thanks to the bloody partners. Like a weekend time.
Got Get Wet.
I'll use a working tomorrow. I'm going to get shit-faced in Sydney.
And Brooks Hire through the show. We've also got
Brooks Airways, Brooks Hire, Brooks Equipment.
anything
Just
you
Brooks.
need. Verify. Give Grant at Verify No E an email. Silverstone, our new sponsor as well.
Kenny Keogh, what a GC.
What a man.
Everything power for mining.
Anytime Exploration Services.
Seamus Murphy.
Another new sponsor, WA Waterbores. Give
How good is James?
James at wawaterbores.com.au. Give him an email.
GC James. Oh, how
And-
good is Rhino Sullivan?
K-Drill.
But they've been here for so long, and Rhino Sullivan is as good, if not better now than when he started.
Matty, we got to go. Hootaroo.
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 The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.